Now, section D, that is 12 marks. Question number 29. Journalize the following transactions in the books of Suraj. On 1st January 2021, commenced business with cash 40,000. 5th January, bought goods from Ravi 10,000. 8th January, sold goods to Vinayak for 15,000. 10th January, returned goods to Ravi. That is called as what actually? Purchase returns. That is 300. 12th January 2021, Vinayak returned us goods. Earlier we have sold goods to Vinayak. Now Vinayak is returning us goods, means it is sales returns. 15th January, paid Ravi 5,000 by cash and the balance through check. So we should say that 10,000 is the amount that is we purchased from Ravi. 300 has been not actually returned. That means it comes to 9,700. Out of 9,700, 5,000 paid by cash. So remaining 4,700 paid through check. That you should know. That means you are supposed to deduct that. All of a sudden, if you say 10,000, 5,000 cash, 5,000 check, then that is wrong, because we have already returned 300 worth of goods to Ravi, right? Received a check from Vinayak 10,000 and the balance received by cash. Even in that also 15,000 is there, where he has returned 300. That means out of 15,000, 300 minus then 14,700. He has made how much actually? 10,000 in cash. Remaining 4,000 we received 10,000 in check and balance in cash. That is 4,700 in cash. It is just opposite of the previous entry. Withdraw cash 1,000 and goods 500 for domestic use. So this is the trick which has been given in the problem. Whenever goods has been drawn for domestic use, your drawings is a different transaction. Most important. Say when you draw cash, it is cash account. That's very simple. Drawings account data to cash account. But when you withdraw goods for personal use, you must be very careful. You should take that one from your purchases. You should take from your purchases. Then what is the journal entry that you are going to pass? Drawings account data to purchases account. You may ask, how sir? It is very simple. Assuming that you are running a provisional stores, right? You have bought 100 kgs of what actually rice, right? All of a sudden you are in need of 10 kgs of rice for your house. Then out of 100 kgs, 10 kgs that you have taken for your house. The remaining is how much actually? 90. So you have taken that 10 kgs from the total purchases of how much actually? 100 kgs. Now for sale it is only how many kgs? 90 kgs. In the similar fashion, when goods has been used for personal purpose, that drawings debit and credit what actually the purchases accounts. That is the trick has been given in the problem. Now the last journal entry is 25th January 2021, paid printing charges 500. So all entries are very simple except one or two entries. So let us write first. On 1st January 2021, commenced business with cash 40,000. So you know that you are supposed to write journal entries in the books of Suraj. Date, particulars, LF, debit. So first date is 1/1/2021. That is cash account debtor. Cash account debtor 40,000. 40,000 to Suraj's capital account. Suraj's capital account 40,000. Commenced business with cash. Commenced business with cash. So first journal entry is over. Next journal entry 5/1/2021, bought goods from Ravi 10,000. So that is 5/1 21. Bought means it is purchases. So purchases account debtor 10,000 to Ravi's account 10,000. Goods purchased from Ravi on credit. On credit. Now what is the third one? 8/1/2021 sold goods to Vinayak 15,000. Sold goods to Vinayak, that is 8/1/21. Vinayak's account debtor 15,000 to sales account 15,000. Goods sold to Vinayak on credit. Sold goods to Vinayak on credit. Next, return goods to Ravi. I told you we have purchased goods from Ravi. We are returning goods to Ravi, means it is called as purchase returns. So date is 10/1. That is Ravi's account debtor 300 to purchase returns account 300. Goods returned to Ravi. Goods returned to Ravi. Remember students, purchase returns is also called as return outwards. Then next, 10/1/2021 Vinayak returned us goods. Earlier we have sold goods to Vinayak. Now he has returned goods, means it is sales returns. That is 12/1/21 sales returns account debtor 300 to Vinayak's account 300. Goods returned by Vinayak. Goods returned by Vinayak. Finish. Next, 15/1/2021 paid to Ravi 5,000 by cash and the balance through check. So from Ravi we have purchased how much clay? 10,000. We have returned how much clay? 300. So 10,000 minus 300 is 9,700. Now we are paying how much? Cash, how much we are paying? 5,000. Remaining is how much clay? 4,700. So it is very simple. We are paying 5,000 cash and 4,000 by check. That means we have to pay bank. So 15/1 that is Ravi's account debtor 9,700 to cash account 5,000 to bank account 4,700. Ravi's purchased amount paid part by cash and part by check after deducting purchase returns. After deducting purchase returns. I have given you detailed narration so that you will understand. If you have a doubt, here I can say 10,000 minus 300 is equal to 9,700. Now this 9,700 has been paid 5,000 in cash and 4,000 in what actually? Check. So that has been. Next journal entry, 18 January 2021, received check from Vinayak 10,000 and the balance received by cash. So we have sold goods to Vinayak how much? 15,000. We have returned how much actually? 300. He has returned 300. So 15,000 minus 300 is 14,700. He is giving 10,000 by check. So out of 14,700, 10,000 check. And the balance is what actually? Cash. So we will write the journal entry. 18/1/21, that is bank account debtor 10,000, cash account debtor 4,700 to Vinayak's account 14,700. Check and cash received from Vinayak after deducting sales returns. Even you can say that after adjusting sales returns, it is one and the same. Either you can say deducting or adjusting sales returns, right? So to understand this one, I can say that 15,000 is there, minus 300 is returns. So how much is 14,700? Now 14,700, 10,000 by check and 4,700 by cash. Now the next journal entry. Withdrawn cash rupees 1,000 and goods worth rupees 500 for domestic use. Most important, that is 20th 1/21. It is called as drawings. It is called as drawings. Drawings account debtor, don't write anything debit, to cash account, it is 1,000. To purchasers account, those who do not understand, you can say it is goods. You are not supposed to write goods, you are supposed to write what actually? Purchasers. It will be adjusted in purchasers only. So purchasers 500. Now the debit item is how much actually? 1,500. Now the narration is cash and goods withdrawn for personal use. Now the last journal entry in this problem is 25th January 2021, paid for printing charges 500. So 25th January 21, printing charges account debtor 500 to cash account 500. Printing charges paid. Now all journal entries are over. Then what you should write? It is just you write the total. So total is 92,000. If you write like this, you will get 12 out of 12. Now problem number 30. Record the following transactions of Mrs. Kishore India Limited in 2-column cash book. So it's a rare thing. They have asked for usually simple cash book or petty cash book, but for 15 marks they have asked what actually cash book, 2-column cash book. That means which has got both cash and bank, right? So on 1st April 2021, cash balance, then bank balance. April 3rd, insurance premium paid by check. So you should remember, when you have both cash and bank, anything paid out of check, it should enter in the bank column. Issued a check for goods purchased, again it should appear in the bank column. April 8th, sold goods and received a check from Rahul. So you have received check. So in this case, you must be very careful. Say you just see the next 2 entries, then we will decide what we should do. Then 11th April, sold goods to Mahesh and get the amount transferred to our bank account. Very simple. Now it have a UPI. It is straight away, it has what I can transfer to the. I hope you know that when you buy Panipuri, that you will not pay cash. You will pay through what actually your mobile app. In the similar fashion, they have transferred that amount to what actually bank account. So April 13, paid rent by check. April 16, paid wages. It is cash. April 19th, bought goods from Amit. It is for cash. 25th April, sold goods to Mamata and received a check. April 29, Mamata's check deposited into the bank. Now here you should see the transaction of April 8th, sold goods and received a check from Rahul. So straight away it is very simple. If nothing else is mentioned, that means it has been deposited directly into the bank. So you can enter that one in the bank account. But here you have sold it on 25th, but you are depositing on 29th. In such a case, what you should do is, say there are difference of 4 days. Then what you should do, first 25th April, you treat that one as cash. Then on 29th, you deposit that one into bank. Then it becomes a contra entry. What is contra entry? The entry which appears on both the sides of the cash book. Once in cash column, the other one in what actually bank column is called as contra entry. So now let us work out how to solve this problem through bank account, that is 2-column cash book. So first one, 1st April 2021, to balance brought down 15,000, then 2,20,000. Over, first entry is over. Then next 3rd April, insurance premium paid by check. Paid by check means it comes under bank column. Immediately remember your journal entry. Insurance premium account data to bank account. Very simple. So 3rd of April by insurance premium in the bank column you write 6,000. Next, April 6, issued a check for goods purchase, or I can say the good purchase and issued a check. That means through the bank. So date is how much actually? 6th April. 6th April 21 by purchases. How much it is? 28,000. Next, 8th, sold goods and received a check from Rahul. How much? 19,000. So very simple. What you should do is bank account debtor to sales account. Bank account debtor to sales account. That is 8th 8th April 21, 8th April 21 to sales account 19,000. Next, April 11th, sold goods to Mahesh and get the amount transferred to our bank account. So straight away it comes to bank. That means it is very simple, bank account debtor to sales account. So 11th April 21, again to sales account 36,000. I'm sorry, here I have written in the cash column, it should have been in the bank column 19,000, very sorry. Here also it is 36,000 in the bank column, because sold goods received a check from Rahul, that is check, and sold goods to Mahesh and get the amount transferred to bank account directly, what actually in the bank account, right? Because I am showing the question paper and working out, so that's a little bit what actually tough job, don't worry, right? Then April 13, paid rent by check, that is 13th 13/4/21, by rent you have paid to check, it is 12,000. Next, 16th April, paid wages 3,500, that is cash, that is 16th April, by wages cash, it is 3,500. Then bought goods from Amit, rupees how much actually? 65,000. Bought goods from Amit, how much actually? 65,000. So how much it is 65,000? It is cash. That means we have not what actually paid, what actually check. Bought goods from Amit 65,000, that is on 19th April. Are you going to write? I just what actually said 2-3 times, but you must be very careful why I said that one. Bought goods from Anvit, nothing has been mentioned. It is a credit transaction. I have shown here in 2 marks, so that you should have observed. That means it will not come under cash book. It should not come under cash book, because we are preparing subsidiary books. Under subsidiary books, when you buy anything on credit, that appears under what actually? Purchases book, sales book, purchase returns book, and sales returns book. So you should not take this one transaction into account at 65,000, right? April 25th, sold goods to Mamata and received a check, but it has been deposited on 29th. It has been deposited on 29th. I told you first you treat this one as what actually? Cash. So what you should do is 25th April 21 to sales, that is called as what actually? You have sold goods and received a check. How much? 56,000. It has been treated as what actually? Now cash. Now it has been deposited into bank on 29th. So same amount, that is here we have to write, that is 29/4/2021, that is to cash account in the bank column 56,000, and 29/4/2021 by bank account in the cash column 56,000. So this has appeared on both the sets of the cash book. This is called as contra entry. Right? Now what you should do is, you should total it up and find the balance. So total is 71,000, then 3,31,000, 71,000, then 3,31,000, 31,000. Then last day is 30th 4/21. By balance carried down 11,500. You can check 0010. Right. Then 2,85,000. You can check with your calculator the amounts. Then the next date is 1/5/2021 to balance brought down 11,500, then 2,85,000. And you should remember, you can write a note also, bought goods from Amit is not a cash transaction, it is a credit transaction. That's why it will not appear in the cash book. It will not appear in the cash book. This is how you have to do 2-column cash book. Now question number 31. Enter the following transaction in relevant subsidiary books. So you must be very careful. If they ask enter the following transaction in subsidiary books, you prepare purchases account, purchase returns account, sales returns account. But if they ask relevant, you must be very careful. You might have some additional transaction also. So that let us check one by one, right? So you must be careful with this word relevant. December 1st, 2021, purchase goods from Prem, rupees 20,000, less 5% rate discount, which is called as purchases book. Purchases book. December 5th, sold goods to Suresh for rupees 12,000, it is sales book. December 8th, sold goods to Karan 35,000, less trade discount 10%, sold goods, then it is called as sales book. Sales book. Next. Then December 10th, purchase goods from Mohan for rupees 15,000, less trade discount 10%, it is purchases book. Sold goods to Sundar rupees 30,000, it is sales book. Sales book. Next, goods returned to Sundar rupees 5,000. Goods returned to Sundar means earlier we have sold to what actually? Sold goods to Sundar 30,000. Goods returned by Sundar means it is sales returns book. SRB, sales returns book. Goods returned to Prem. From earlier we have purchased goods from Prem. Then it is called as purchase returns book. Purchase returns book. Now, sold old newspaper to Thomas. This is very important. This will not come under what actually your subsidiary books, that is called as purchase book, sales returns book, purchase. No, it will not, because this is a transaction which appears under journal proper. You must be careful. That is why I said relevant. Relevant means then you have to show. Even in this transaction, usually sold newspaper, it is for cash. It will not happen for what actually credit. But unfortunately, it has become credit. No problem. We can say what actually Thomas account data to sale of old newspaper. That I will show you how to write it in journal proper. But it will not come under what actually regular books, that is purchase book, purchase rate. No, it will not appear. Purchase goods from Naveen 20,000, purchases book. Return goods worth rupees 3,000 to Mohan. You see that when you have purchased from Mohan, I think from earlier you have purchased from Mohan. Purchase, that is return goods worth rupees 3,000 to Mohan means on December 10th, purchase goods from Mohan rupees 15,000, less trade discount 10%, where you have returned now, which is called as purchase returns book. PRB, purchase returns book. Then bought goods from Ajay, how much actually? 6,500. Bought and purchase is one and the same, which is called as purchases book. Allowances claim from Ajay for shortage. That means he has given what actually less items than we have claimed, which is called as, what do you mean by, you can take that claim under purchase returns book. Purchase returns book. So if you classify like this, then enter those transactions directly under those books, except this one that I have showed you, that is called as sold old newspaper to Thomas, that should appear under journal proper. Now let us one by one, we will write all the transactions under first purchase book, purchase returns book, sales book and sales returns book. I will show you the method. First we will enter all transactions of purchase book. It becomes easy for you. So on December 1st, purchase goods from Prem 20,000 less 5% discount. So you write 1st December 1/12/21, right, from Prem, how much? 20,000 less trade discount, how much? It is 5%, it is 1,000. So outer column you write 19,000. Now one purchase book entry is over. Next purchase book, that is on 10th December. 10th December, purchase from Mohan 15,000 less trade discount, how much? 10%. So 10th December, Mohan, how much? 15,000 less trade discount, 10%, 1,500, then you write 13,500. Next, sold goods return newspaper. Purchased goods from Naveen, how much actually? 20,000. That is December 25th. 25/12/21 from Naveen, how much? That is 20,000. Next, bought goods from Ajay 6,500. That is December 30th. So 30th December, bought goods from Ajay 6,500. So we have entered all transactions of purchase book. Now let us enter the purchase return books. So I have PB, it is purchase book. PRB is what actually? Purchase returns book. So we will enter one by one. Purchase returns book. Here it is written date, debit note number, name of the supplier, ledger folio and amount. So we will check what are the, it is there. Sold goods, sold goods, purchased goods, sold goods, goods returned by Sundar, no, goods returned to Prem. Goods returned to Prem is PRB, how much actually? 5,000. On which date? December 20th. So 20th 12/21, that is Prem, how much you have written? 5,000. PRB 5,000. Next you see PRB. December 28th, return goods worth rupees 3,000 to Mohan. So 28th December 21, that is Mohan, it is how much? 3,000. Next, 31st December, allowances claim from Ajay for shortage, it is how much actually? 50. Earlier we have bought from Ajay, now we are claiming that shortage. So it should be treated as purchase returns. 31/12/21 from Ajay, you can say shortage, so that you will understand afterwards why you have written like that. This over. Now two things are over. Now it is a sales book and sales returns book. Now sales book, say wherever it is SB you take. Now PB, SB, sales book. December 5th, sold goods to Suresh 12,000. 5th December 21 to whom actually? Suresh. Suresh, how much? 12,000. 12,000. Then SB. SB. Sold goods to Sundar, rupees how much actually? 30,000. Which date? 13th December. 13th December, sold goods to Sundar, 30,000. Do you have any other thing? Purchased goods is there, sold goods to Suresh. Oh, here it is December 8th, sold goods to Kiran, 35,000, less trade discount, 10% SB is there. So, 8th December 21, that is Kiran, that is Karan, how much it is? 35,000 less trade discount 10%, 3,500. Outer column you write 31,500. Then that transaction is there. Now this is purchase book. Then sold goods to Sundar, how much actually? 30,000. That is on December 13th. 13, 12, 21 to Sundar. Sundar, how much? 30,000. 30,000. Now you see any SB is there. This is SRB, this is PRB, this is journal proper, this is purchase book, it is purchase returns book, it is purchase book, it is purchase returns book. So it is over, that is sales book is over. Then you have to prepare sales returns book. This is PB, we have written SB return, SB return, PB return, SB return, SRB. SRB means sales returns book. That is goods returned to Sundar worth rupees 5,000. Which date? That is on 17th December. 17th December 21. That is to Sundar. How much it is? 5,000. Return. Now you see. That is goods returned to Sundar, that is 5,000 is over. Then PRB is over. Now we have to write journal proper. PB is over, PRB is over, PRB is over. Now only one transaction is there. Sold old newspaper to Thomas 200. It cannot enter in your subsidiary book. It is relevant. So relevant means it is journal proper. What is the date? That is, you can see the date. It is 22nd December. So 22nd December 21. Thomas account debtor 200 to sale of old newspapers account 200. Sale of old newspaper to Thomas on credit. It will never happen, but that is what has been given. You are supposed to work out for the examination point of view. Now what you should do? It is very simple. We should say we have to total one by one. So if you take the first total, it's very 0, 0. I will use calculator. 19,000 plus 13,500, 20,000 plus 6,500, 59,000. Students, you please recheck once again. 59,000. Now the total of the second one is very simple. It is 8,050. Now the total of the third one is very simple, 00537, 73,500. Now total of the sales return book is very simple, it is 5,000 only, because we have only one entry. And you can write the total of journal proper, it is 200. This is how you have to work out the problems when relevant subsidiary books. We should be very careful. Relevant means it should be separate. If they enter into subsidiary books, no problem. But relevant, you must be careful. Now, problem number 32. From the following particulars of Mr. Vinod, prepare bank reconciliation statement as on 31st March 2021. Bank balance as per cash book. That means they have given cash book balance, then you have to arrive at passbook balance. That is cash book balance to passbook balance. Checks issued but not presented for payment, 6,000. Then dividend on shares collected by the bank and credited in the passbook, 8,000. Bank charges debited in the passbook, only 400. A check deposited into bank but not collected by the bank, 5,000. Interest credited in the passbook, only rupees 500. Insurance premium paid directly by the bank, understanding advice, rupees 1,000. So before we straight away prepare the reconciliation statement, I have already showed you, that is, you have some small calculation, it becomes easy for you. What is that? We are coming from cash book balance to passbook balance. You can say regular. Why you call it as regular? That means it is positive balance. It is called as positive balance, not negative balance. What is negative balance? It is called as overdraft. So for that sake, the cash book balance to passbook balance. So bank balance as per cash book, first one you leave. Second one, check issued but not presented for payment. Check issued but not presented for payment means when you have issued check issued. When you issue check, cash book balance is showing less, but passbook balance is showing more. So what this sign shows, it is add. So add, how much you have to add? That is 6,000. Next, dividend on shares collected by the bank and credited in the passbook. Dividend credited. Cash book balance is showing less again, but passbook balance is showing more because credited. So it is how much actually? Once again add. How much you have to add? You have to add another 8,000. Next, bank charges debited in the passbook, rupees 400. Bank charges debited in the passbook. That means cash book balance is showing more, but passbook balance is showing less. So less. How much? 400. Next, a check deposited into bank, but not collected by the bank. You have deposited a check. When you deposit a check, then what do you think? Cash book balance have actually increased. So check deposited. You hope that cash book balance is showing more, but passbook balance is showing less because which has not yet been collected. So less, how much it is? 5,000. Next, interest credited in the past rupees, how much actually? 500. So interest, cash book balance is showing less, but passbook balance is showing more because in the bank it has been increased. So add, how much it is? That is 500. Then insurance premium paid directly by the bank, understanding advice. that is called as, what do you mean by instructions, right? That is called as a regular instruction has been given to the bank. That means we have to pay 1000 rupees towards insurance premium. So insurance premium, cash book balance is showing more, but passbook balance is showing less. So less, how much? 1000. Now all calculations are here only. Now what you have to do? Now you know that how many add and how many less are there? 1, 2, 3 add, 1, 2, 3 less. So if you add and less, then automatically you will get what actually the balance as per passbook. So now let us prepare bank reconciliation statement as on 31/3/2021. Done. Balance as per cash book. Balance as per cash book. You just see it is how much actually? 50,000. Balance as per cash book is how much actually? 50,000. Write it in the outer column, 50,000. Then all calculations are here only. You need not what actually go and check. Here only it is there. One by one we will write. First say we will say all add, because we need not worry about it. It has already been done. Add number 1. Check issued but not presented for payment. How much? 6,000. Checks issued but not presented for payment. Presented for payment, 6,000. One thing is you can say tick. This is over. Next add. Dividend credited in the passbook but not entered in the cash book. So second one, dividend collected and credited in the passbook but not in cash book. How much? 8,000. Now second transaction over. Next thing, the add. Next add is what? Interest. Interest credited in the passbook but not what actually in the cash book. So third item, interest credited in the passbook but not in cash book. 500. So now we have done all add items. Now it is the question of what actually? Less. So less. First less. Bank charges debited in the passbook but not entered in the cash book. Rupees how much actually? 400. 1. Bank charges debited in the passbook but not in cash book. How much? 400. You see, put here. Now check deposited into bank rupees 5,000 which has not yet been collected. When you deposit the check, then what you will think? Your cash book balance has what actually? Your passbook balance has increased, but it has not yet been collected. So second one, check deposited but not yet collected and credited in the passbook. Not collected and credited in the passbook. How much? 5,000. 5,000. Put here. Finish. Now the last one. What is that last one? Insurance premium. As per the standing instruction, the bank has paid. Say we have instructed the bank to pay on behalf of the insurance premium. Right? So they have paid rupees 1000, that 1000 rupees as per our instruction. Then what you should do? You should deduct. So the third item, insurance premium paid as per standing instructions, 1000 deduct. Now we have taken all the items. Then what you have to do is add 8 plus 6, 14, 14,500 add. Then it comes to 64,500. Then less 6,400. Then find out the balance. 1, 8, 5. 58,100 balance as per passbook. Balance as per passbook. It's easy method of working out the problem. Now 33rd problem. On 1/4/2017, a firm purchased a machine costing rupees 80,000. On 1/10/2019, it sold the machine for rupees 60,000. From 1/4/2017 to 1/10/2019, right? Sold, that is old machine. On the same date means on 1/10/2019 only, a new machine was purchased for rupees 20,000. Depreciation was charged annually at 10% per annum on straight line method. So very simple. When the straight line method, every year depreciation amount is one and the same. Accounts are closed on 31st March every year. Show machinery account and depreciation account for the first 4 years. First 4 years means what? 17-18, 18-19, 19-20, 20-21. So these are the 4 years. That means where we have to show up to 31st of March 2021 the machinery account and depreciation account. Here also my advice is, that is, you prepare calculation part. What is that calculation? Machinery account you prepare separately. In this I will show you one more easy system. It becomes easy for you to prepare depreciation account. So machinery account, machinery 1. You have purchased that machinery on which date? 1/4/2017. Depreciation rate is how much actually? 10%. 10%. You have sold it on 1/10/2019. So 1/4/2017 purchased machinery for rupees 80,000. Good, 80,000. 31/3/2018 less depreciation at 10%, that is 8,000. It becomes 72,000. This is the balance on 1/4/2018 balance, 72,000. Again 31/3/2019 less depreciation. You need not calculate depreciation. Every year depreciation is one and the same, that is 8,000. So now 72 minus 8 is 64,000 is the balance on 1/4/2019. Now we have come to 2019. Say here he says that on 1/10/2019 it sold the machinery for rupees 60,000. 1/10, that is from 1/4 to 1/10, April, May, June, July, August, September, October. Correct? 1/4/2010 to 1/10, October is not there up to September because he has sold that machinery on 1/10, that means in October. So April, May, June, July, August, September. It is only 6 months. So less depreciation for 6 months. For 6 months. So 1 year it is how much actually? 8,000. For 6 months it becomes how much actually? 8,000 divided by 2. That means it comes to 4,000. 4,000. So 4,000 minus depreciation, it comes to how much actually? 60,000. You have sold the machinery for rupees how much actually? 60,000 only. That means no profit, no loss. So less sold 60,000. That means 0, 0, 0, no profit or loss. No profit or loss from the first machine. Then on the same date, on 1/10/2019 only, you have purchased one more machine costing rupees how much actually? 20,000. So machine 2, 1/10/2019 purchased machinery for rupees 20,000. Then 31/3/2020 depreciation, October, November, December, January, February, March, 6 months. So 10% of 20,000 is 2,000 divided by 2. It is how much actually? 1,000. For half year it is not 2,000, it is 1,000. So it becomes how much actually? 19,000 is the balance. Balance on 1/4/2020. Then 31/3/2021, right? Less depreciation, original cost, right line method, you are supposed to calculate on 20,000. That is 10% of 20,000. It is 2,000. So balance is 17,000 is on 1/4/2021 balance. So your balance is 17,000. Here I am going to show you how to write the total amounts in the depreciation account. Very simple. So first you would write the 1/4/2017 to 31/3/2018. It is only 8,000. Depreciation is only 8,000. Then 1/4/2018 to 31/3/2019. Also it is how much actually? 8,000. But 1/4/2019 to 31/3/2020. You must be very careful. Here you have a depreciation of 4,000 and in the same year you have a depreciation of how much actually? 1,000. So it comes to how much actually? 4,000 plus 1,000. Then it comes to how much actually? 5,000. So in the year 1920 it is 5,000. Then 1/4/2020 to 31/3/2021, it is only 2,000. It is only 2,000. Now in the depreciation account is 8,000, 8,000, 5,000, 2,000. There ends the. So again you need not turn page to turn back and see how much it is, how much, no need. So that is also part of the calculation, it is over. Now we have to prepare which account. Now all calculations are here only. All calculations here. Straight away just take that one and what actually write the machinery account. So let us write machinery account. So 1/4/2017 to bank account 80,000. Credit side 31/3/18 by depreciation account 8,000 by balance carried down 72,000. Total is 80,000. 80,000 over 1/4 2018. To balance brought down 72,000. Then 31,319 by depreciation account, that is 8,000, by balance carried down 64,000. So total is 72,000. 72,000. Then 1/4/2019 to balance brought down, that is 64,000. On 1/10/2019 you have purchased new machinery to bank account 20,000. Then 1/10/2019 by depreciation account for the old machinery, it is 4,000. By bank account, same date 1/10/2019, by bank account you have sold the machinery, old machinery, for rupees 60,000. Here you see 4 plus 60 is how much? 64. What is the old balance? 64. 64 plus 64 minus, cancelled. Now 31,320. 31,320 by depreciation account. By depreciation account, that is 1,000 of the new machinery for 6 months. By balance carried down, it is 19,000. So write the total. Write the total. Total is 84,000. 84,000. 1/4/2020 to balance brought down 19,000. 31,321 by depreciation account 2,000, by balance carried down 17,000. Total 19,000. 19,000. Then 1/4/21 to balance brought down 17,000. 17,000. So this is machinery account. You see here what all the calculations that has been done. What are the calculation has been done? Here only it is there. It has been entered what actually in your machinery account. Now let us prepare depreciation account. Now depreciation account 31/3/2018 to machinery account. Machinery account 8,000. 31/3/18 by profit and loss account 8,000. First year machinery this depreciation account is over. 31/3/19 to machinery account 8,000. 31/3/19 by profit and loss account, that is 8,000. Hence matter. 31/3/20 to machinery account, it is 5,000. It is not actually 8,000, it is half year 4,000 plus 1,000. You can see here I have shown the calculation, it becomes easy for you. I have already shown you 4,000 plus 1,000, it is how much actually? 5,000. So this becomes easy straight away. You write 5,000, 31,320 by profit and loss account 5,000. Finished. Then 31,321 to machinery account, that is 2,000. 31,321 by profit and loss account 2,000. That's all. So you can easily prepare the machinery account. If you write like this, you will get 12 out of 12. Now problem number 34. On 1/4/2021, Ravi sold goods to Shashi on credit for rupees 50,000 and drew a 3 months bill. On the same day, Shashi accepted the bill. On the due date, the bill was honored by Shashi. Pass the necessary journal entries in the books of both the parties, that is Ravi and Shashi. We have done several problems. In a similar fashion it has been given. So let us work out one by one. So on 1/4/2021, Ravi sold goods to Shashi. So journal entries in the books of Ravi. 1/4/21, that is Shashi's account debtor. Shashi's account debtor 50,000 to sales account. 50,000. Goods sold to Shashi on credit. Goods sold to Shashi on credit. First journal entry is over. On the same day, he drew a bill on Shashi. So 1/4/21, bills receivable account debtor. Bills receivable account debtor 50,000 to Shashi's account. 50,000. Bill drawn on Shashi has been accepted. It is how many months? 3 months. So when it is 3 months, it is very simple. 3 months, 3 days. That means on the due date, it has been honored. So what you should do? You remember, I have written here 1/4/21, 3 months, 3 days. You have to add always 3 days, grace days. Then it becomes 4/4/21. So on the due date, that is 4/7. I am sorry, 4/7. 4/7. 4 plus 3 is 7. So 4/7/21, bank account debtor 50,000 to bills receivable account. Bills receivable account 50,000. On the due date, Shashi honored the bill and amount received. So this is in the books of Ravi. Now you have to write in the books of what actually now Shashi in the similar fashion. In the similar fashion. So same date 1/4/21, purchases account debtor, 50,000 to Ravi's account. 50,000. Goods purchased from Ravi on credit. First journal entry is over. Then on the same day, Shashi, that is Ravi, drew a bill on Shashi. It was accepted by Shashi. So same date 1/4/2021, Ravi's account debtor 50,000 to bills payable account 50,000. Bill drawn by Ravi has been accepted. Now the one more last journal entries, that is 4/7/21, where the due date. So due date 4/7/21, bills payable account debtor 50,000 to bank account 50,000. On the due date, bill has been honored and paid. If you write like this, 6 journal entries are there. You will get for each journal entry 2 marks. 6 into 12 is 12 marks. But you have to write all these things perfectly. That is date, particulars, ledger folio, then journal entries. But don't write the calculations here. You write somewhere else. Here for your information I have written like this. If you write like this, you are definitely going to get one question on this. You can take 12 out of 12 from this question. Now problem number 35. From the following trial balance, prepare final account for the year ended 31st March 2021. They have only given debit balance and credit balance. What you do is you just practice at home that how it can be classified. Machinery, asset, that means it comes in balance sheet. Cash at bank is asset. Cash in hand, asset. Wages, it comes under trading account debit side. Purchases, trading account debit side. Stock which appears in the trial balance, it is opening stock, which comes under trading account debit side. Sundry debtors is asset. Bills issuable, asset. Rent which appears under profit and loss account debit side. Legal expenses, profit and loss account debit side. General expenses, profit and loss account debit side. Bad debts, profit and loss account debit side. Capital is a liability which appears in the balance sheet. Sales, trading account credit side. Sundry creditors, liability. Commission received, profit and loss account credit side. Now we have written like this. So this is how you should practice at home. When you classify this one mentally in the at home, it becomes easy in the examination hall. Automatically your what you call hand it goes and mind it goes that this item is what, this item is what, and this item where it is, and that item where it is. It is very easy for you, right? Then next, adjustment. Any adjustment that is outside the trial balance, it should be effected twice. Stock on 31/3/2021, that is closing stock, which appears on trading account credit side plus asset, that means asset side of the balance sheet. Then depreciate measured at 10%, profit and loss account debit plus asset minus, that means from the asset you are supposed to deduct minus. Rent prepaid. Rent prepaid means what? You have paid next month what actually rent in advance. So it is an asset for us. Then what you have to do? Profit and loss account debit minus plus asset plus asset. Then provide RBDD, that is PPDD, provision for doubtful debts at 5% on sundry debtors. Provision for doubtful debt 5% on debtors. So it is very simple. Profit and loss account debit plus asset minus. That is from sundry debtors you are supposed to minus that 5% PDD. Commission received in advance. Anything you receive advance, don't think that it is a asset, it is a liability. Anything you pay in advance is an asset, but anything you receive in advance is a liability. Then what you should do? Profit and loss account credit minus, profit and loss account credit minus plus, which appears on the liability side of the balance sheet. So these are the adjustments. 5 adjustments are there. Now we will work out the trading and profit and loss account and balance sheet. Trading and profit and loss account for the year ending 31/3/2021. Particulars amount, you can say this is debit side, this is credit side. You have to write all these things without fail. So you know that wherever it is there, that is wherever trading account it is there, then we have to start. First, opening stock 12,000 to opening stock 12,000. Then to purchases 16,000. Then wages 2,000. To wages 2,000. Then you see, do you have anything? Trading account debit side, trading account debit side, trading account debit side, asset, profit account, there is nothing is there. Then here it is what actually sales, that is trading account credit side 32,000. Buy sales 32,000. Then you have entered here closing stock only, which appears on trading account credit side. It is how much actually? 16,000. By closing stock 16,000. Now we entered all the items of what actually the trading account. Then what you have to do? You just leave like this, write like this. Don't balance it. Write like this. Credit side is more than the debit side, that means it is profit. You need not worry. So here you write gross profit brought down, that we will do it later on. First let us enter all the items of our profit and loss account, right? So first one by one we will say rent. It is how much actually? 900. So to rent, inner column you write 900. Why? Rent prepaid is how much actually? 200. So less prepaid 200. So write it in the outer column 700. Then after that it is legal expenses 500 to legal expenses 500. Then general expenses 1600 to general expenses 600. General expenses 1600. I'm sorry, 1600. Then bad debts 1000 to bad debts 1000. Now we have written debit side item. You have credit side item. Commission received, how much? 600. By commission 600. Write it in inner column because you have an adjustment. Commission received in advance rupees 400. So less received in advance that is 400. That means outer column 200. Then come to the adjustment. We have taken stock. Depreciate machinery at 10%. What is the value of machinery? 8,000. How much depreciation? 10%. So to depreciation on machinery at 10%, that is 800. Those who do not know, you can say that 10% of 8,000, you will come to know it is 800. Then rent prepaid we have taken. Provide PDD at 5% on debtors. So debtors is how much actually? 8,800. So 5% is 440. It is very easy. 10% you do, it is 880. Divided by 2, it becomes 440. So to PDD at 5%. Those who could not get, you say 5% of 8,800. 440. You just see whether you have taken all the items or not. Yes, we have taken trading account debit side, we have taken trading account debit side, we have taken trading account debit side, we have taken. Then profit account debit side we have taken, profit account debit side we have taken, purchase general expenses, profit account debit side we have taken, bad debts we have taken, sales we have taken, then commission received, and we have taken all adjustments. Stock 16,000 has been taken, depreciation machinery has been taken, rent prepaid has been taken, PDD has been taken, commission received in advance has been taken. That means we have taken all that. See, this is how you have to confirm in the examination hall. You see that whether all the items have been entered in the same account or not first, right? Now we will find out the gross profit and net profit. Net profit 48,000 is the total. 48,000 is the total. To gross profit carried down, it is 18,000. So 18,000. Likewise, you bring that to the profit and loss account. 18,000. Then put the total. 18,200. 18,200. So net profit is 13,160. To net profit transfer to capital account or balance sheet. capital account or balance sheet. Whatever you write, you write. So this is 13,160. Now we have to prepare balance sheet. Now balance sheet as on 31/3/2021, liabilities, amount, assets, amount, inner column, outer column. Practice this inner column, outer column so that it is very easy. Any adjustment is there, you just do it in the inner column, right? So first, capital 18,000. Capital 18,000. Add net profit. Add net profit 13,160. Just now we have calculated. If you have a doubt, you can see that one. Here it is there, 13,160. Now write that 13,160, right? Then it becomes 31,160. Then you see sundry creditors 9,000. Sundry creditors 9,000. Now you see we have written the capital, we have written trading account credit side, we have taken creditors taken, commission received has been taken. Now come to here, machinery. Machinery has how much actually? 8,000, right? So machinery asset, inner column 8,000, less depreciation. Less depreciation 800. Write it in the outer column 7,200. Next, cash at bank 2,000. Cash at bank 2,000. Next, cash in hand 1,000. Cash in hand 1,000. Wages we have already taken. Purchases we have taken. Stock we have taken. That means you have to take only the closing stock. Sundry debtors, how much? 8,800. Sundry debtors 8,800. Write it in inner column. Less PDD, provision for doubtful debts 440. So write it in the outer column 8,360. 8,360. Bills receivable. Bills receivable 5,800. Bills receivable 5,800. Rent has been taken, legal expense has been taken, general expense has been taken, bad debts has been taken. Now stock 31/3/2021, 16,000. Trading account credit side has appeared. Now it is again asset. So stock 16,000. Stock 16,000. Depreciate measure 10%, profit loss account debit, and asset we have already minus. Rent prepaid, profit account debit we have minus, but we have to take it under as well asset. Prepaid rent it is 200. Then provide PDD at 5% on debtors, we have already taken. Profit account debit side and asset minus we have done. Commission received in advance 400. We have deducted from profit account credit side, and again it will appear on liability side. I told you any income received in advance is not an asset, it is a liability. Commission received in advance. Commission received in advance 400. Just total it up automatically, which tallies 40,560. 40,560. 60. Students, what you can do is, while working out this one, you take a printout of your model question paper, then keep it with you, then work out. Along with this video only, you can work out. It becomes damn easy for you. This is how you have to work out the final account, that is trading account, trading and profits account and balance sheet. Now, the last problem under section D. 36 problem. Mr. Akshay Kumar keeps his books on incomplete records. He gives you the following information. Say, this is what you call single entry system of bookkeeping. When it is single entry system of bookkeeping, you are supposed to prepare combined statement of affairs to find out opening capital and closing capital. So what you do is, in this information, very simple, you just classify that one, which one is what. Cash in hand, 1,500 asset. Cash at bank, 15,000, 10,000 asset. Stock, 1,95,000 asset. Debtors, 42,500, 70,000 asset. Business premises is nothing but buildings, 75,000, 1,35,000 asset. Furniture, 9,000 is asset. Creditors is liability. Then bills payable, 44,000, 58,000, it is again liability. If you write like that, you know that which one that we are writing. First, these items you should write it on the asset side, and the next two items you have to write it on liability side. Now let us go to adjustment. During the year, he withdrew 45,000 for his personal use and introduced 25,000 further capital in the business. Adjustment. Appreciate building premises by 20%. Depreciate furniture by 10%. Outstanding salary 1,000. Provision for doubtful debts at 10% on debtors. Prepare statement of affairs, statement of profit or loss for the year ending 31/3/2021. Revised statement of affairs as on 31/3/2021. Now, first we prepare combined statement of affairs. So, combined statement of affairs, liabilities 1/4/2020, 31/3/2021, assets 1/4/2020, 31/3/2021. So, we will write one by one whatever is there. Cash in hand 1,000, 1,500. Cash in hand 1,000, 1,500. Cash at bank. Cash at bank 15,000, 10,000. Then stock 1 lakh, then 95,000. Stock 1 lakh, then 95,000. Next, debtors 42,500, 70,000. Debtors 42,500, then 70,000. Next, business premises 75,000, 1,35,000. Business premises 75,000, 1,35,000. 1,35,000. Furniture 9,000, 9,000. Furniture 9,000, 9,000. Now, the next two items are liability. Creditors 66,000, 87,000. Creditors 66,000, 87,000. Bills payable 44,000, 58,000. Bills payable 44,000, 58,000. That's all. Then we have to find out opening capital, closing capital, right? Now we'll find out opening capital is how much and closing capital is how much. The total is 2,42,500, then 3,20,500, 2,42,500, then 3,20,500. Opening capital is 1,32,500. This is opening capital. Then 1,75,500 is closing capital. You can just check 5. Right, 1,32,500 and 1,75,500. So we have found out what actually opening capital and closing capital. Now we have to prepare statement of profit and loss for the year ending 31/3/2021. Closing capital 1,75,500. Add drawings 45,000. When you add drawings, then it becomes 2,20,500 less additional capital 25,000. 1,95,500. That is called as adjusted closing capital. Adjusted closing capital. Next, less opening capital. How much it is? 1,32,500 minus 1,32,500. Then 63,000 is called as gross profit. Now less expenses or losses. Just go to what actually your statement. Appreciate building is plus point. Depreciate furniture by 10%. So depreciate furniture by 10% means the furniture is how much actually? 9,000. So that is 10% of 9,000 is 900. So number 1, depreciation on furniture at 10%. Write it in inner column 900. Then second adjustment. Outstanding salary 1,000. Outstanding salary 1,000. Next, provision for doubtful debts at 10% on debtors. So PDD at 10% of 70,000. It should be on the closing balance, not on the opening balance. 7,000. 7,000. So you just see 8,900 minus, you will get 54,100. Add income bar gain, that is appreciate business premises by 20%. Appreciation on building at 20%. 20% of, you must be very careful, 75,000, 1,35,000. They have made an addition of 60,000, but they have not mentioned when they have purchased. So for that sake, you are supposed to calculate on the opening balance, that is on the closing balance of 1,35,000. So 20% of 1,35,000. Then it comes to 27,000. So 81,100 is net profit. 81,100 is net profit. Now we have to prepare the revised statement of affairs as 31/3/2021. So revised closing statement of affairs as on 31/3/2021, liabilities amount, assets amount. Right. So here we'll take creditors. How much? 87,000. Creditors 87,000. Then bills payable 58,000. 58,000. Then you see any adjustment is there. Outstanding salary 1,000. So outstanding salary 1,000. Outstanding salary 1,000. Next, the last item always it should be the capital. So capital, opening capital, if you have a doubt you write opening. Opening capital 1,32,500. Add net profit. Net profit we have only found out net profit is how much actually? 81,100. So add net profit 81,100, and he has introduced additional capital, how much actually? 25,000. Add additional capital, that is 25,000. All those things put it in the inner column only, 2,38,600. Less drawings. He has drawn during there is how much actually? 45,000 minus 45,000. So outer column you write 1,93,600. So liability side is over. Now what you have to do? You have to write it on the asset side, right? Cash in hand 1,500. Cash in hand 1,500. Cash at bank 10,000. Cash at bank 10,000. Then stock 95,000. Then debtors 70,000. Debtors, inner column, write 70,000 less PDD, provision for doubtful debts. I hope you remember, here you have taken PDD as how much actually? 7,000. You are supposed to deduct that now actually 7,000. PDD 7,000. Outer column you write 63,000. Then next item, business premises. Business premises, inner column you write 1,35,000. 1,35,000. You have increased by how much actually? 20%. Add appreciation 27,000. So outer column it comes to 1,62,000. 1,62,000. Next, furniture 9,000. Furniture 9,000. Less depreciation. You have calculated depreciation, that is 900. That is depreciation is how much actually? 900. Now minus that what actually? 900 here. So outer column you write 8,100. Then total it up, automatically your closing statement of a FIFSL tally 3,39,600. 3,39,600. This is how you have to work out single entry system of bookkeeping. Now the last part of your question paper is section E, practical oriented questions. Answer any two questions. Each question carries 5 marks. That means 2 questions into 5 or 5 into 2 questions, 10 marks. They have asked 4 questions. Draw the components of chart of GST. Draw a specimen of check. Prepare a trading account with 5 imaginary figures. Draw a blank block diagram of main components of computers. I have answered all the 4 questions. So you can choose even in the examination, whichever is easy for you, you can write. Great. So let us start with one thing. Section E. Draw the components of chart of GST, goods and services tax. Components of GST is GST, intrastate movement, interstate movement. Intrastate movement means outside the state. Intrastate means within the state. Interstate means outside the state. Intrastate it is called as, well, within it is called as what actually? CGST, SGST. Then interstate movement is IGST. Then under that GST levied by center, then this is GST levied by the state. This GST levied by center and state concurrently. So if you write this chart, then you will get 5 marks, right? Now next question is draw a specimen of check. For this there is no need to explanation. You can check any check from your parents or brothers. Take that. I have even answered that only I have done. State Bank of India one check where you will have date, you will have to pay, then by order then rupees, amount, then account number, then what is that valid date, then you write IFSC code and these numbers without fail, right? And signature, that is called as very important signature. You have to write that specimen as it is in the examination hall. Better you use colors and prepare specimen of a check. Now prepare trading account with 5 imaginary figures. Trading account of Mr. A for the year ending 31/3/2000 -- expenses or losses, revenue, gains, to opening stock, to purchases, to wages, to gross profit, by sales by closing stock. So any 5, I've given 1, 2, 3, 4, 5, 6 items I have given. So you can take carriage inwards, right? Very simple. Then you can say less purchase returns or less sales returns. You can take anything, right? Likewise, freight and octroi you can take. Likewise, you can select any 5 items and you can write what actually the trading account. So when you write the trading account, then it becomes particularly, you say that balancing figure must be your gross profit. So it is very easy trading account. If you are so keen, you can say that in your previous what you call in under section D, you have prepared final account where you would have prepared one trading account. You take that only, make it double or make it half and write one what actually specimen. Their NC meter, give what actually the some name, some other name, then write that specimen where you have already written that account. So this is the trick that where you have to use your brain in the examination hall. Then last question, 40th question, draw a block diagram of main components of a computer. You cannot change anything. You have to write like definitely secondary storage, input, output, input, memory unit, LU, then control unit. You have to write as it is. There you have to remember from what to what it is there. Then you can easily practice these components of a computer, right? So these are the things that we have answered all the questions, right? Whatever the doubt is there or something is there, you can just mail to us or put it in the box, then we will clarify your doubts. I wish all students all the very best for your forthcoming examination, right? I would like to see that every student get out is the educator guru aim, right? Good luck.